Welcome to our morning classes on the subject of indirect tax from CA final. So in the previous lecture, which we discussed, which we started this subject, we started with the core concept, that is the taxable event under under GST, which is supply. Now, if you remember, we had discussed the entire origin, how we landed with the supply concept, and we had started understanding supply in the form of this particular table or this particular box. Now, today we'll dive deeper and we'll go further into the subject, into the concept of supply. So basically, if I have to reiterate, every taxation law requires two things. One is the subject matter and one is the taxable event. Subject matter under GST is goods and services, and the event on which the GST would be attracting is the event of supply. So put together, supply of goods and service is what attracts GST. When we have to understand supply, though supply is a generic term, but the concept of supply is very different when we come to GST. So understand the basic objective. The basic objective purpose is to cover all commercial transactions. Keep this in mind. So in order to cover all commercial transactions into one word, the lawmaker, using the international usage in international VAT laws, international GST laws, fixed the word supply, and this has become our taxable event. Now, if I have to put it in very raw language, what is supply? So I've given you these three golden words. Supply is in Hindi, sub pe apply. It means on all commercial transactions, we want to apply GST. So all commercial transactions will be supply. However, having said this, it is not so straightforward. It is not so easy because there are various carve-outs, there are exceptions, there are conditions. So we are understanding supply with the help of this small diagram. So this whole box, the entire box, represents your commercial transactions. Now, when we talk about all commercial transactions, out of the commercial transactions, some which are the outer layer of this box have been specifically kept outside GST, and this is, you can say, our step one. So step one is determining what is kept outside GST by the legislature by putting it in a specific category called as no supply. This is what, if you remember, we studied in Schedule 3 in the last class, plus some notifications and circulars. We determined what should not be supply as per the legislature. Now, out of the remaining commercial transactions, which is your inner box, now we will proceed further today to find out what will be supply as per our second step. Now, in the second step, what we are going to cover is the definition and the scope. So basically, what are the requirement conditions to be fulfilled in order that the transaction can be treated as supply. Now, interestingly, within the inner box, which transactions satisfy the definition of supply, those will become supply, and those transactions which still even do not satisfy this definition will again be out of supply. So now again we will determine what is supply, and that will be by testing the conditions of supply, and the transactions which do not satisfy our conditions, which do not fall in the scope, they will again be outside the scope of supply. They will not be supply. So I hope you understood this, that in terms of supply, there are two things which will not be a supply. First, the outer layer. The outer layer covers the specific transactions listed out in Schedule 3 notifications and circulars, which are to be regarded neither as supply of goods nor supply of service. And then within the inner layer, those transactions which do not satisfy our conditions of supply. So this was all our discussion of the previous class. Now, after we have understood the negative list, the exclusion list, let us go to the positive conditions, which are essential to complete the definition of supply and to finally determine what would be supply, what would be not. Now, as we all have discussed in the previous class itself, it is section 7 of the CGST Act, which defines supply. Within section 7, in the last class, we dealt with section 7, subsection, which gave two clauses A and B. So section 7 bracket 2 gave two clauses A and B, and that defined what will not be supply. Now, after dealing with that, now we come to what is supply as per the main part of section 7, that is section 7.1. Now, interestingly, supply is defined as supply includes. Now, students, since you are at the final level, now you should also work on the interpretation of statutes. Now, when I say interpretation of statutes, you should know that whenever a statute is to be read, is to be understood, there are some rules, principles, how a statute should be interpreted. One of the rules is that whenever you are reading any meaning, any definition, there are two possibilities. Either it will have the word means, like you'll find in some of the definitions that we'll study, or it will have the mean includes. Now, whenever the word includes is used, what it means that what we are going to explain is just illustrative, it is not exhaustive. And if the word means is used, it will mean that what we have explained, what we have defined is the exhaustive list. It is the full and final list. Nothing beyond this will be covered in that definition. So as we'll proceed today, we'll go to different definitions. In certain definitions, you will come across the word means. In the present definition, it is includes. So there are different limbs. So broadly, the supply definition is covered in 4 limbs. Out of these 4 limbs, these 3 are specific transactions, which the lawmaker has said that this will be supply always. But again, these 3 specific transactions covers only 3 types of transactions. Remaining all transactions, which I said on day 1, that what is supply, it is commercial transactions. How a commercial transaction will become a supply, the main part is clause A. So in order to understand supply in its generic sense, which will be applicable to 95% of the cases, you have to check, you have to apply clause A. Just a minute. Okay. Now, how is supply to be understood? So this is the most important part, students, because specific things you can remember because they cover one of the situations. But what is applicable to each and every situation will be clause A. So it says supply means all forms of supply. Now, interestingly, within the term supply, they have again used the word supply. What is all forms? We will understand. Then this all forms of supply should apply to goods or services or both. So this is what you have to do. This is on what you have to do it. So this is the transaction. This is the subject matter. Now, what are these forms of supply that is explained here, such as? So forms of supply are all these terms. Now, if you look at all these terms, students, these are all commercial transactions. Sale, transfer, barter, exchange. We have read this already somewhere at some earlier, maybe in some other chapter. Like if you recall the definition of transfer under capital gain, you'll find many of these words being covered there. Again, in many common laws, you find these words. So these are all generic words because these all represents your day-to-day commercial transactions. So whenever you enter into any of these transactions for the subject matter, which is goods or service or a combination of the both, and most important, this is done for a consideration. Now this becomes your third limb. So first limb is there should be some transaction. Second limb is it should be of good service. Third limb is it is to be done for a consideration. And the fourth limb is in the course of business. Now when all the limbs are satisfied, then your transaction becomes a supply. Now students, you have to understand this particularly with the help of day-to-day examples. Now today, when you are going to a shop to buy a laptop or a mobile handset, you have to test whether it will be a supply. Today, when you join a particular course, and let us say you have come to us for coaching, whether this will be a supply, you have to test. So simple, take your day-to-day real life examples. Need not go to the book examples. Book examples are always there. But to understand a concept, you should always see the real life scenarios. Now, see each and every limb. First, one of the forms should be present. So when you go and buy any commodity from the market, either it is sale, either it is transfer, barter, exchange, yes. Whenever you take any service, it will be the license, rental, lease. So one of the elements of commercial transactions should be present. So when you buy a laptop, it is sale. When you avail coaching, it is availing or getting a service. And now you have to test whether these items are goods or service or both. Obviously, prima facie, we know laptop, mobile handset, coaching, all these are goods and service. We'll go to the technical definition also. Now comes the main and most important element. Is this supply made or agreed to be made for a consideration? Now, in case of laptop, in case of mobile handset, you have done it for a consideration. But in case of our coaching, we are, if providing the coaching free, then this will not apply. We are, if providing the coaching for some consideration, then again the coaching that we are providing will become supply. Now, the interesting part is, if you try to connect it with contract act, interestingly over there, if you recall, the word was adequate consideration. So there was in many provisions term use adequate or inadequate consideration. Similarly, when you go to many property laws like Transfer of Properties Act, etc., again the word adequate consideration is used. However, interestingly here, the word only uses consideration. There is no requirement of adequacy or completeness. So interestingly, whether we are providing this coaching for a fair price, which is going on in the market, or we are providing it even at a nominal price, because our purpose is not to earn, our purpose is the benefit of the students. In such a case, whether the price is a fair price that is adequate, whether it is a nominal price that is inadequate, makes no difference in GST. The only requirement is there should be a consideration. And most important, last requirement is it should be in the course or furtherance of business. Now, interestingly, what is this course and furtherance of business? That again is a detailed discussion point. But again, I'll give you a simple, interesting real life analogy. So you have purchased this laptop, you have purchased this mobile handset. For the seller, that is for the shopkeeper, selling it is a business. So for them, this transaction qualifies as a supply. Now, after using this mobile handset for, let us say, a year, you decide to change the handset. Again, what you will do, you will go to a shop, either you will sell it or you will do exchange of that particular mobile phone against a new handset. Now, in any case, you have satisfied one limb. Second, what you are dealing with is mobile handset, so it is good. Second limb is satisfied. Third limb is also satisfied because either money is paid to you for the sale of the mobile or another mobile is given and the price of that other mobile is reduced. So there is a consideration in some form. But importantly, is selling the mobile phone your business or anyways related to your business? Answer is no. If it is not directly your business or indirectly related to your business, then when you are going to sell this mobile phone in future or this laptop in future, it will not tantamount to supply because the last limb of supply is missing. So importantly, all four limbs of supplies have to be satisfied, and importantly, each of the limb. Now, when we'll proceed, you'll find that there are some exceptions, carve outs. That is going to be a specific case which you'll have to keep in mind. So each limb may have some exceptions, some carve out, some special features that you'll have to keep in mind. But first step is testing any transaction on four fronts. There should be some form of supply, there should be good service, there should be consideration, and it should be in the course or furtherance of business. Only when all these elements are present, we call the transaction as a supply. Now, so let us understand now each of these elements. So for supply to happen, two things are required. First, there should be some form of supply, and second, there should be goods or service. Now, what are these different forms of supply as we saw above? Again, it is an illustrative list because it is using the term such as. So such as means it is just trying to give you an example. Such as is example. When we say for example, instead you can say such as. So it means this is not the exhaustive list. So there can be multiple other forms of supply that could also be covered in supply, because anyway supply itself starts with the word includes, and plus this list is preceded by the term such as. Now, what is the other requirement is when you are doing sale, when you are doing exchange, barter, whatever, it has to be done either of goods or of services. Now, what is goods? Let us understand. So we have one definition of goods in the Constitution, which is a more generic definition. And then we have specific definition of goods in each of the laws. Earlier excise law had, earlier VAT laws had. Now we are having it in the GST law. Interestingly, this definition is not matching completely with what we had in VAT law. There is some deviation because VAT law was limiting itself to only one subject matter. GST is limiting itself to multiple subject matters. Hence, the definition itself is also much broader. Now, interestingly, students mark this. It is starting with the word means. So here the definition is going to be exhaustive. So whatever is written over here is only goods. Correct? So most important requirement for goods is it should be a movable item. So anything which is not movable cannot be goods. Hence, land, building, any type of civil structure will never be goods. Now, besides this first part that it should be a movable property, now there are carve outs. Okay, what will not be goods? So it is saying money and security. And then it is further adding something. However, we will include in goods actionable claim, growing crops, grass, and things attached to forming part of land, which are agreed to be severed before supply or under the contract of supply. So, first it says all movable properties are goods. Then it says excluding two items, which are though movable, but we do not want to cover it in goods. And then it is clarifying that it will include. Now, what will be included in goods? Actionable claims. What it is, we'll study immediately after this definition. Second, growing crops, grass, things attached to or forming part of land. Now, interestingly, when you read all this, growing crops, grass, things attached to land, you will say, sir, wait, you said here it should be movable. Now, how can they include immovable? Firstly, if the lawmaker wants, they can include immovable also, but here they have not included immovable. This is what is important. Why? Because for all this, there is a condition. What is the condition? Which is this, that even though today it is a growing crop, that is, you can see some farmland and you are seeing crops being there on the land, it means it is still in the growing stage. Or you can see grass, which is obviously still embedded on the land, or there could be anything which is attached to land. So prima facie, it appears to be immovable. However, it is not immovable. Why? Because what will be covered here in goods is all these things which is attached to the land, which is part of the land, but which is agreed to be severed before its supply. It means when you have come to my land, you are not going to take the crops in this same position in which they are today. You are contracting with me that, okay, let the crop completes its life cycle, let it ripen completely, and then I have to cut it and give it to you. Even for grass, I have to cut it and give it to you. Even for things attached to the earth, I have to remove it and give it to you. So what you are contracting with me is eventually a movable property, and that is what is the clarificatory part here. So in this includes part where they are including this growing crops and all, they are trying to clarify that even though today they are in the position of immovable, but the intention is to sever it, cut it, and then get it. So that will make it movable again. And that is why it is included as a clarificatory part. So three limbs in goods, it should be movable, but it will not be money and security. And then it will include all of these things, provided they are agreed to be cut and given to you. Now in this list, one item which is unique is actionable claim. Now students, if you read this definition as it is bare definition, it is slightly appearing to be technical and slightly appearing to be confusing. However, I'll give you the limbs of this. Try to understand it in limbs, that is in parts. It will be very easy to understand and even remember the definition. Though you will not be asked to write the definition verbatim at this level, but it may be helpful to you in understanding any judgment in future whenever it comes relating to this, or it will even help you understand many of the pointers that you study in this chapter itself. Now, the definition is given under Section 2, Clause 1 of the CGST Act, but here they have simply referred to Section 3 of the TOPA, that is Transfer of Properties Act. So basically, the definition which we are seeing over here is taken from TOPA Section 3. Now, students, what is an actionable claim? So understand this. This word is made up of two limbs. One is actionable and one is claim. So let us understand one by one what it means. So firstly, we are trying to understand what is a claim. So again, students, understand this with a generic understanding first. In common parlance, when you use the word claim, what it means, you will always say, I claim this, means I ask for this, I demand this. And when you can ask for or demand something, when it belongs to you. So when something of yours is with somebody else, you say, I have a claim on that item. Now here, what is the claim? The claim is towards any debt or other than a debt which is secured by mortgage of immovable property, hypothecation, pledge, etc. Or, so first thing is, what is your claim? The claim is towards money. So somebody is owing your money, or you have a claim in the form of a beneficial interest in some movable property which is not in your possession, but it is in the possession of some other person. So first part up to here is the first part of this definition, that is what is a claim. So firstly, claim is towards debt. Debt means, I'm sure you all would be knowing, being students of commerce, we use the word debtors, we use the word debts. So you are demanding your money. So there is a claim of amount which is lying with somebody else, And most important, this is other than secured. It means it is an unsecured debt. So you have given loan to someone, you have provided your service to someone, you have sold your goods to someone, and all these things are on credit. And now that amount is pending. Now we all know when we sell goods to someone, we provide service to someone on credit, we are not getting any security for that. So we are doing it as a part of our business. Similarly, you may give loan to some of your friends, your relatives when they are in need. You may not have taken any security. So what is important is actionable claim do not cover secured debts. That is the first important point. It will cover unsecured debts. Second, what it is covering is your claim is towards what? Your claim is towards a beneficial interest in a movable property which is not in your possession. So it is not in the possession actual constructive of the claimant. So it means there is a movable property which belongs to you and you are demanding or you are claiming the beneficial interest in that movable property. So first part is there is a claim which is of debt or of beneficial interest in a movable property, and that movable property is not in your possession, right? So simply your car is with your friend, your shares are with your friends, your mobile, your handset is with laptop is with your friend. So these are movable properties which are not in your possession, and you have a claim towards the beneficial interest in this movable property because you are the owner or the deemed owner of this. So you have a beneficial interest. Now, second part of this definition requires the claim to be actionable. What is, students, the simple meaning of actionable? The simple meaning of actionable is that now you are demanding these things, amount of money or your beneficial interest in some movable property. Now, what if the person does not gives you back your money or gives you back your movable property? You have a recourse. What is that recourse? That the civil court are accepting this as a ground for relief, which means you can file a suit for that in the civil court. That makes your claim actionable. Understand this. So why the word actionable is used? So actionable means if the person is not returning back your money, not returning back your movable property, you can file a suit, file a case against that person for recovery, and civil courts will accept your case and give you the relief. That is what is actionable claim. Now, in our taxation parlance, I explained this to you in the generic parlance. What will be basically covered here? So, you have purchased a lottery ticket. You have taken an insurance policy. Now, students understand this. In commercial parlance, these all things will become actionable claim. Why? First, if let us say you win the lottery, that is why here the word is such debt or beneficial interest may be existent, accruing, or even conditional or contingent. So the examples which I have just given you is of insurance claim, of lottery. All these are contingent. They may not be present today. Or if you have already given a loan, it is already present today. Something is such that it may be accruing, like you have shares. So whatever is dividend, that is accruing on the shares. So these are all amounts. If they are outstanding, so they become debt. And since they are your legal rights on it, civil courts will give you the relief in the form of passing a judgment in your favor, and you can take action in the civil court. Hence, all these items, lottery tickets, your insurance policy, all these things will become actionable claim, either present or maybe in future whenever the conditions are satisfied or whenever the contingency is met. So all these things will become your actionable claims. Fine, students. So now actionable claims are goods under GST. The second component, students, the second subject matter under GST is service. Again, the definition starts with the word means. So this is an exhaustive definition, but interestingly, it is so broadly coined that it says anything except goods. So whatever is not goods above will be service. But again, it has kept something outside. So again, other than money and securities. So importantly, if you observe, money and securities is outside goods, it is outside service. So effectively, it is outside GST. So broadly, it has first said other than goods, everything, but money and securities are still outside. Importantly, money is outside, but if you have given somebody your money for use, like you are giving your money on loan, and against that, there will be some consideration that you are going to charge, like interest, then use of money is a service. So money is not goods, money is not service, but giving money on loan or giving it to somebody for some period of time so that they can use your money. And for giving this, you are charging some interest, which is a consideration for giving it on loan. That becomes service. Similarly, for money, another possibility is either you are giving it for use or you are doing the act of converting somebody's money from one form to another. So it may be from one form to another, or from one currency to another, or from one denomination to another. So somebody wants their dollar to be converted to rupee, you are doing that, and again you are charging some consideration. So it is nothing but the money exchange activity. So money itself is neither goods nor service, but giving money on loan or exchanging the money for some consideration will be a service. Further, securities are again neither goods nor service, but they say that service will include what? Facilitating or arranging transaction in security. So what share brokers are doing? They are facilitating transaction in securities. So only through share brokers you can purchase or sell securities over the stock market. So whoever facilitates your transaction in securities or arranges the transaction in security, and again you give them some consideration in the form of their commission, that will again be a service. Then comes the definition of manufacture, which is very simple. It is processing of raw material or inputs, and it may be done in any manner. Most important is which leads to a new product having distinct name, character, use. Then that activity becomes manufacture. Now, two things are excluded from both goods and service. What are those two things? Money and security. Let us understand, students, what is money. So money basically means legal currency, either of India or of any foreign country. And besides the legal currency, all the negotiable instruments like check, promissory notes, bill of exchange, letter of credit, all these things will be considered as money. So money in its physical form, or money in the form of any of these negotiable instruments, or wherever, even if it is done electronically, it will be treated as money. Now, what is very important is, besides this, if there is any instrument which is recognized by RBI as what? As money, similar to money, that will also be treated as money. So I'll give you example. In the previous class, we were discussing about vouchers, where you pay an amount in advance to a mall, and the mall wala gives you that piece of paper, which we called as voucher. If you remember, even in the definition of voucher, the term instrument was used. I said instead of reading instrument, read it as a document. So that is what is covered here. Even in the voucher point, if you recall, students, in the previous class, we had discussed about the same point, that the vouchers, wherever are given validity by RBI, that yes, this can be used as a medium of payment, as a medium of exchange, so that in those cases, the voucher is treated as money. Same thing is reiterated over here. So voucher is one such example, which in some cases is recognized by RBI, and it can be used as a consideration to settle your outstanding. That is money. Now, interestingly, the carve out is what will not be treated as money. So we said currency, legal tender is money, whether Indian or foreign. But some currency is not money. Which currency? Which is held for its numismatic value. Now you'll say, sir, what is this numismatic value? So you have a currency note, and on that the number printed is 10000001. Now I'm sure you all know this, that whenever any currency note has a special number printed, even though the currency note may be of rupee 500, but somebody may be ready to pay you 10,000 rupees for that because it has a special number printed on that. Or maybe because there is some number which represents a particular date. So let us say 1947. So currency note has this particular number or date 1947. So there are some of these numbers, digits, which have a special value in the eyes of people, because of which, even though the currency note is of 500, but if they want that particular note from you because it is having that particular digit or number, they're ready to pay multiple fold. That is where we say the currency is held for its numismatic value and not monetary value. So 500 rupee note has a monetary value of 500 because you can buy anything worth 500 with the note. That is a monetary value. Numismatic value is something is such printed on the note which gives it a different value which is multifold than the monetary value. Such currency will not be treated as money because now it becomes a tradable commodity because it has that number or some type of date on it which increases its value and it becomes a saleable commodity. So that currency will not be treated as currency, money, it will be treated as goods. Then comes securities. Again, securities are outside GST because they are neither goods nor service. Again, the definition of securities has to be taken from SCRA. Now, as per SCRA, you'll find that what is security? So all types of share, debentures, etc. All these are securities. Now, a question had come that can we say that derivatives, which is nowadays a very common commodity traded in stock market, whether derivatives is security? So in order to understand this, we'll have to first understand what are derivatives. So basically derivatives are what? These are contracts or documents that by themselves do not have a value, but they derive the value from something else, which is called as the underlying asset. So for example, I have a gold derivative. So my derivative is clearly linked with the gold prices in the market. If gold prices increase, my derivative value increase. So that is what is derivative. Now important is whether derivatives are securities. Now let us say the derivatives are linked with shares. So where share price increase, the derivative price increases. Whether it will fall in the definition of securities. So the answer is yes. Derivatives fall in the definition of securities and hence they will be neither goods nor services. Now, what are the different types of derivative contracts? So we go to it one by one. So first is future contracts. Again, future contracts are in the nature of derivatives. Hence, they are treated as securities and hence not subjected to GST. However, where future contracts have a delivery option and the settlement takes place by the way of actual delivery of underlying commodity. So let us say it is a gold derivative. So the underlying commodity is gold and your contract is concluded by actually giving the delivery of gold. Then such future contracts would be treated as normal supply of goods. Why? Because ultimately what has come against that contract is goods. So only where the contract is settled without actual delivery, then it will become securities and not goods, not service. But where it is settled by delivery of the actual underlying commodity, then it becomes supply of goods. Further, where settlement takes place by actual delivery of underlying commodity currency, then it would be a normal supply as we just saw above. And in that case, it would be leviable to GST. However, where the settlement takes place by net settlement of the differential amount. So you neither purchased nor sold the gold, but you settled the difference. Then it will be falling in the term of security and obviously then not chargeable to GST. Next, GST implication of secured debts. We saw unsecured debt is actionable claim. So what is the treatment of secured debt? So let us say a bank is having many of the loan accounts. Nowadays, it is very common. Bank sells it to a asset reconstruction company. Many times when the loans are becoming NPA, the bank sells the loans to some third party and then the third party will recover the loan from the uh, people who have taken the loan. In such cases, whether the loans which are sold by the bank, and obviously majority of these loans are backed by security, whether it will be taxable or not. So sale, purchase, acquisition, assignment of a secured debt does not constitute a transaction in money, but it is in the nature of derivative. So it is not money, but it is in the nature of derivative. And the moment it is derivative, it becomes security. And moment it becomes security, it is outside GST. Further, GST implication of transaction in instruments. So transaction in instruments like interest rate swaps, foreign currency exchange swaps, again would be excluded from the definition of supply because again, these instruments are derivatives. So we have to understand the implication that where any of these instruments are settled financially without actually giving or taking the underlying asset, in that case, it takes the color of security, it is outside GST. But where the underlying asset is given, then it becomes a normal sale, normal supply leviable to GST. So students, this is all about the first requirement, that there should be goods, service, and there should be supply, that is form of supply. Now we proceed further with the definition of supply. The second requirement is consideration. Now, when we say consideration, the question is what is consideration in relation to a particular supply? So let us say I have sold you laptop. What will be consideration? The consideration is simply whatever you get in response, in respect, or for the inducement of the supply. So in short, if I have to put it simply, against the supply, what is given back to you is what is consideration. So in short, that particular receipt by you should be directly linked with the supply made by you. So against your supply made, whatever you have received will be consideration. Now this may be received in the form of a payment, which may be either in money or non-money form, like something in kind, or it may not be in the form of money, but it may be in the form of an act or forbearance. And again, this act or forbearance is done in respect of, in response to, etc. supply. So the point is, either there is money, either there is something in kind, or there is an act or forbearance done, and all these things are done in exchange of, or because I have done supply, so now you have to counter it with something. So that is what is coming against my supply. So whenever anything in any form is coming against my supply, that will be considered as consideration. However, what is important to be understood is that this consideration will not include the amount of subsidy given by central state government. So wherever any amount is given to me as a part of subsidy, and this subsidy is coming strictly from central or state government, it will not be covered. So this is what is an important point, students, you should keep in mind. Another important aspect about consideration is who pays the consideration. That is not important. So whether it is paid by the recipient or by any other person makes no difference. So I may or may not get the consideration from the person who is the recipient, but a third party, still it will be treated as a consideration. Now within consideration, another component is deposit. Now there is a difference between advance and deposit. What is the difference? You have come to me for consultancy. I say, okay, boss, you have to first give me my fees, rupees 1 lakh in advance. Then only I'll do the consultancy or advocacy. You agree, you pay me 1 lakh before, and then I give you the service. This is not deposit. This is advance, and advance is very much consideration. Now, what is deposit then? Deposit is that amount which again you have paid me prior, but this amount I cannot utilize. It is kept as a safety or a security. Like I have given my flat on rent. Rent is rupees 1 lakh per month. But I say, boss, I want some safety. I want some security. What type? Okay, tomorrow, if you do some damage to my property, how will I recover that damage? Or let us say tomorrow, if you flee, if you run away and you have not paid me my rent, how will I recover? In such cases, a general practice is between 3 to 6 months of the rent, that much amount is given at the start, but that is not advance. It is not that if you have given me that 3 months amount today, I will not be taking rent for the 3 months. No, I'm taking rent for each and every month. That is what is the difference between advance and deposit. Had this been advance, I would not have taken the rent for next 3 months. But whenever you are giving me this 3 months amount and calling it as deposit or a security, which means what? I will be keeping this amount with me and you will continue to pay me rent every month. And whenever in future you default it, I will utilize it, I will apply it for meeting that default. Now, importantly, today when you give me this deposit is not towards the rent. Hence, the deposit will not be considered as payment today. But in future, whenever, let us say you have not paid me rent of 2 months and now you run away, then in that case, what I will do, I will apply the deposit towards the supply. Now, the moment I apply the deposit towards the supply, which means what? I will treat your deposit now as the rent because you have not paid me rent and you have asked me to adjust it here. So this amount which you have asked me to adjust over here, the moment I adjust it, it becomes a consideration. Understood, students? I hope this is clear to all. Now, within consideration, there are some activities given in Schedule 1 as per Section 7(1)(c), where consideration is not required and still it becomes a supply. So, this Schedule 1 is also said to be a deemed supply. Now, what is this deemed supply? That even where consideration, which is one of the important elements of supply, is missing, those activities will be leviable to GST. So these are those specific cases which are exception to the condition of consideration. And in these specific cases, even though you have not paid or will not be giving me any consideration, anything in return, but still my supply would be treated as a valid supply and would be leviable to GST. So what are they? Let us understand. So just give me a minute. Now, let us understand, students, what is deemed to be a supply, even if it is without any consideration. First requirement or the first para, it covers the particular situation where you have permanently given away any of your business asset. Now, the word used over here is transfer disposal. I've used a simplified word, given away. So where you have permanently given away your business asset. And most important condition is that this business asset is such where when you had purchased it, the input tax credit on that, you have availed it. So the moment you avail input tax credit on a business asset, the business asset is entitled or eligible for this para 1 in future whenever it is sold. So example, as a business, you have purchased certain laptops and computers. Now, after 2 years of usage, you believe that the laptops and computers are now no more serving the purpose. You need some latest model. Now, first option is you can sell it in the market as second-hand goods. Now, the moment you sell it in the market as second-hand goods, you need not come to Schedule 1 because you are getting a consideration. Then we go to the generic rule, satisfy the 4 conditions. Is there a sale? Yes. Is laptop goods? Yes. Is there a consideration? Yes. And fourth, is it in the course or furtherance of business? Now, interestingly, at the start today, I had given you the same example that when you have purchased a laptop and you are selling it in future, it is not a supply. Why? Because you are not in the business of selling of laptop and it is not even indirectly connected to your business. But now, let us say I am in the business of consultancy, in the business of advocacy, and for my office, I had purchased these laptops. After 2 years, when I'm selling it, now all the 4 tests have to be checked, out of which 3 tests are satisfied. The business test is to be checked. Now, I am not in the direct business of purchase sale of laptops, right? But indirectly, this sale of laptop is part of my business. Why? Because these laptops are part of my business. I had purchased it for the purpose of my business. And after my use for business is over, I am selling it off. That is why the condition is in the course of business. It is not saying that this should be your business directly. It may be in the course of business. So indirectly, this sale of laptop is connected to my business, my profession of consultancy. Hence, if I sell it for a consideration, it is a supply as per 7(1)(a). However, we are in this situation where I have not sold it because I feel anyways I'm not going to get any decent amount, or I believe that instead of me selling it, let me give it away free. Where or to whom? So let us say I give it free to some trust which requires computers either for their work, or I go to my school and I decide to donate it to my school's computer lab where the usage is not so heavy and even my computers or laptops are of old model that would suffice the work of the students in the computer lab. So in all these cases, what I have done, I have made a permanent transfer or I have done a permanent disposal of the laptops which are my business asset. And most important, when this par 1 or para 1 will be applicable only when if at the time of purchase I had taken the ITC. So obviously 2 years back when these laptops were purchased by me, the GST component on the laptop I had taken as my input tax credit. So this is, students, the first item in para 1. Now what is very, very important for the purpose of your exams, there are, out of these paras, I believe these 2 paras are the most critical, most important. Even in your practical day-to-day life, this is found in majority of the cases. Now, what is the second para? In second para, what I'm supplying may be goods or service. And here, my supply is between either two related persons or between distinct persons. And it is done again in the course of my business. Now, what is this requirement? Now, in this requirement, all the limbs of supply are present except one limb, that is consideration. Now we have to understand this point in detail. What is the point? That wherever the transaction is between related persons, even though if it is free, it will be a supply. Similarly, if the transaction is between distinct persons, even though if it is free, it will be a supply. Now, what is a distinct person under GST? So under GST, students, you all know that we have to take registration whenever we are covered under GST law, and that registration is state-wise wherever I have my place of business or from wherever I'm going to make a supply. Now, if I have my business in 6 different states, so we had taken this example earlier also. So I am taking registration for each state separately. Or within one state, if I have multiple place of business, now here the law gives me choice. I may take single registration or separate registration, whatever it is. Point is, each of my registration are distinct person. We have discussed this in the previous class as well. Now, let us put it this way. So this is my Delhi office and this is my Maharashtra office. If anything is sent by my Delhi office to Maharashtra office, let us say there are laptops kept in Delhi office which are of not much use over there. So I asked the Delhi office to send it to my Bombay Maharashtra office. So when my Delhi office will send the laptops to Maharashtra, since both are me only, there is no consideration flowing. But because of this concept of distinct person, and Delhi is one person and Maharashtra is another person because both have separate GST numbers, even though the legal person is same. Now, since they are distinct persons, whatever is being sent from one branch to another, that will amount to a supply, and Delhi branch will be required to discharge GST. So important point is that wherever there is transfer between distinct persons, even though it is free and practically it will be free, it will still be a supply. Similarly, if the transaction is between related persons, same. So if a related person is giving something free to its another related person, so let us say I'm a chartered accountant doing consultancy and advocacy. My brother comes and asks for the service. So obviously, when I'm giving consulting to my brother, I'm not going to charge my brother. Now, in such cases where I do consultancy free for my brother, it will be a chargeable supply because of Schedule 1, Para 2. Now, who all are related persons? So they say related persons will be any of them. Now, this is a list. We will study this in section 15, that is valuation section. But since here the term was used, I have replicated the list here from section 14. So who are related persons? So for this, firstly, the law says person will cover legal persons and they will be treated as related if they are directors of one another business. So company and director. So if a director gives anything free to the company, it will still be a supply because of this entry. Or they are partners. So firm and partners are treated as related persons. Employer-employee are related persons. Where an outsider is controlling both of you, then both of you are said to be related person. Where one is controlling another, like holding subsidiary, or a third person is controlled by both of you together. In all these cases, you two are treated as related persons, and then it says members of the same family. What is family? So family covers spouse, children, parents, grandparents, brothers, sisters. Now for this category, that is parents, grandparents, brothers, sisters, they have put a condition that they should be wholly or mainly dependent. So wherever, as I was giving example, if I'm giving consultancy free to my brother, and if my brother is wholly dependent on me, then my brother is said to be my related person. And even though I'm giving the consultancy free, I have to discharge GST on that. So Para 2 covers such transactions.
Now in para 2, there is one exception. Now we just saw employer and employee are related persons. So if between them there is anything which is given free, it would still tantamount to supply. However, an exception to this is if an employer is giving gift to its employee and the value of the gift during a financial year is not exceeding 50,000 rupees, then then it will be treated as not a supply. So the point is, we are saying anything given free between relatives or related persons will be a supply, but an exception to that is where employer is giving gift to employee exceeding 50,000, it will not be treated as supply. Next two parts are simple, students, in this schedule 1. So there is supply only of goods by principal to agent or by agent to principal. So when principal send goods to agent and the agent is going to sell the goods on behalf of the principal by giving his own invoice, or vice versa, the agent has purchased goods on behalf of the principal, taken invoice in his name, and now going to send the goods to the principal. In all these cases, this transaction between principal agent may be done without consideration will be treated as a supply. Next is import of service. Now, when you are importing service from a related person or from your own entity which is outside India, so let us say you have a branch outside India and you are importing any service from them and it is done in the course of business, such import of service will be deemed to be a supply. So let us say I have a branch in Dubai, same consulting office, and that Dubai branch has given some consulting services to my Indian branch. In such cases, this is import of service. Obviously, this will be free because both are my branches, so they won't be charging anything. But whatever my Dubai branch has given to my Indian branch, that will be treated as a supply. So students, these are those scenarios where even without consideration, if something is flowing in these situations, it will be a supply. Now, in relation to import of service, students, you have to understand that import of service is treated as supply under three clauses. First, where the transaction of import is done with a consideration in the course or furtherance of business, means all the limbs of section 7(1)(a) are satisfied, it is a supply. Second, it may be done without consideration. Now, when it is done without consideration and it is done between related persons or distinct persons, it is again a supply, but as per 7(1)(c), read with Schedule 1, Para 4. But where it is done without consideration in other cases, what are other cases? One, it is not between related or distinct person. Two, it is in personal capacity, not in the course of business. So free import of service and not from related person will be no supply because the conditions over here are not satisfied. Or free import of service but for personal use, not for business use, again it will not be a supply because conditions of para 4 are not met. Now, relating to the consideration, there are some clarification circulars. So first is whether there is any taxable supply whenever a charitable institution receives donation from an individual sponsor. Now, this is a very common situation, students. Many times we go to a charitable institution and we wish to give them some donation. Now, importantly, when you give them donation, what is it that you are getting in return? Quid pro quo means something in return. If you are not getting anything in return, there is no question of supply, there is no question of any taxability. So whenever you go to any of these institutions, which are normally in common parlance called as trust, and you give them any financial help, but there is nothing in return, then there is no tax. However, we are not discussing this point mainly over here in the circular because this is pretty straightforward because nothing is coming in return. Now here the situation to be discussed is that many times when you donate some amount of money to a trust, your name is put somewhere. So outside some room, on a particular bench, or on the water cooler, your name is put. Now, when your name is put somewhere, whether this putting of name will tantamount to you receiving some supply from the trust, that is what is the point of discussion over here. Now, here the circular clarifies that wherever your name is put only as an acknowledgement, as a recognition, like you find in many trusts, religious trusts or charitable trusts, names of donors are put. Or as I was giving example, if a particular person has contributed money for constructing a room, for constructing a particular sitting facility, or for creating toilets, so many times they are recognized by putting their names somewhere. Putting of names only as a recognition is not tantamounting to supply. So where putting of names is only for expression of gratitude because you have donated to us, or as a public recognition, it is not aimed for giving publicity to the donor. Now publicity means in relation to business, then it is not a supply. But let us say if a businessman has given donation to a trust and has asked to put the name of his business or his brand in that particular premises of the trust, then this circular says the scenario changes. So wherever your name is put in individual capacity, no supply, but where the business name is put, or it is done in the form of some advertisement or promotion of your business, then it would be a supply under this circular. So the distinguishing point, students, is whether your name is put in individual capacity or your company's, your business's brand name is put, which will tantamount to publicity. Another circular is dealing with where artworks are sent by artists to the galleries for exhibition. So let us say I have 50 paintings. I send them so that it can be displayed in some exhibition which is happening today. When I'm sending it to the gallery, I'm not selling it to them. So there is no supply at this point of time. However, out of this 50, 30 paintings get sold. Now for those 30 paintings, I will be receiving money from the final buyer. That is only what is supplied. So when I'm sending the paintings to be displayed in the exhibition or at the art gallery, there is no supply and GST cannot be applicable in such cases. Another situation is where you have taken a policy, let us say a health policy in a year or a fire policy in a year. Now it has to be renewed every year. It means every year a fresh policy has to be taken. Now, in order that you continue taking the policy, what these policy companies do, they say that if you continue your policy in the second year, third year, fourth year, we will give you a no claim bonus. So basically what they are saying, our policy premium is 40,000. We are giving you a no claim bonus of 10,000. So you pay us 30,000. Now smartly what they are doing, this is a marketing gimmick whereby they are saying our policies of same 40,000 because at this price we are giving it to everyone. But since you are my old policy holder and in past few years you have not taken any claim, so I am giving you a no claim bonus. So when they are projecting it, they are showing as if they are giving you something. So again, the question comes that when the insurance company is giving you something called as no claim bonus, is it a consideration? Is there a supply? Again, the answer is no. See, this is a different form of giving discount. So instead of calling it as discount, I'm saying that I'm giving you no claim bonus and then we are settling the amount and you pay me net 30,000. Actually, that amount is nothing but a discount. Next scenario student comes is that whenever you have taken a policy and let us say actually some damage is caused. Now, let us say the policy was of some machinery and there was some fire and the machinery gets destroyed in that fire. But many times there is some salvage value. Now, this salvage is taken over by the insurance company. So one possibility they will take over the salvage and they will sell it in the market and get money for that, or they will deduct the value of salvage from your insurance claim and give you the net amount. The question is, whatever salvage they are taking, is it that you are selling the salvage to them? Is it that you have done some supply of salvage to them, and whether GST is payable? The answer is no. Because when you have insured a particular asset, the entire asset along with its salvage is now the property of the insurance company. Insurance company is going to make anyways the amount of claim to you. So whatever is the salvage which you are returning or giving to the insurance company is what belongs to them, and there is no GST on that. Then student, this is a very specific scenario, taxability of cost petroleum. So cost petroleum is basically where you are running a petroleum refinery and you have entered into a production profit sharing contract with the government. So you have to give a share to the government out of your profits from this petroleum business. Now, anyways, this is outside GST, no problem. Now, what is cost petroleum? So cost petroleum is basically the value of petrol which the contractor is entitled to take in a year for recovery of contract cost is called as cost petroleum. Now, this cost petroleum, students, is not leviable to GST because it is not a consideration received by the contractor. Again, it is something which is belonging to the contractor itself. Then students come sales promotion schemes. Now again, there is a question that many times when you go to malls, like presently we are having monsoon, so there would be monsoon sale going on. Very soon we'll have 15th August, so there will be a 15th August sale. Now students, in all these cases, a question comes that whenever there is any such sales promotion scheme, and in that scheme, what is happening is the company is giving you something called as gift. Now, when it is given to you as gift, we just saw that if any business asset is given free or it is permanently disposed of, even though it is given free, it will be treated as a supply. Now, the question is whether this gift is a supply. Further, you have another situation. You buy one and you get another free. Whether this will also be treated as a supply under this particular schedule. So the answer is no. Such gifts or buy one get one offer are all promotional offers. So what this circular says, like specifically where there is buy one get one offer, they say we will treat that whatever price you have paid, that price, even though you are paying it for one, but effectively it is for giving you both the commodities. So we will not treat the other commodity as free. That is what is the provision. And then students, the third condition is that the supply should be made by a person in the course or furtherance of business. Now, person is defined over here specifically to include all of these. So you'll find this definition similar to the income tax definition, that who is included in person, individual, HF, company, firm, trust, LLP, local authority, AOP, BOI, corporations, body corporate. What is different from income tax is this. Remaining all these people, cooperative society, artificial person, all these are covered in income tax. But if you see the income tax law definition of person, government is not treated as person there, but here in all indirect taxes, government is also treated as a person. And then comes the final component, that is business. So we have seen that anything done in the course or furtherance of business will tantamount to supply. Now the question is, what is business? Now here, the GST law has defined the term business very expansively. It has covered all direct, indirect, and some specific activities into business. So these are some specific activities which are treated as business. But before that, in general sense, what is business? So business is trade, commerce, manufacture, profession, vocation, adventure, wager, or similar activity. So when you indulge in any of these activities, the law says these all activities are business. Most important, whether or not they are done for getting any profit. Now this is strange. Normally we understand business as a profit making or profit motive activity. However, they have clarified here in the definition itself that let us say you have Baba Ramdev Trust which is also engaged in doing trading, manufacturing. But will that be not a business simply because it is a NPO, that is not for profit organization? So that is what is clarified here. Okay, we have nothing to do with the intention. The moment you are doing any of these activities which amounts to trade, commerce, etc., that will become a business, whether or not you had any profit intention. Then the second part is further expanding the original. So this is the main business activity. Now, any activity transaction which is done in connection with or incidental or ancillary to the main part, that is also business. So as I was giving example, I had purchased laptops for my business, and after using it for 2 years, now I'm selling it off, disposing it off. Even this activity is my business because it is in connection with or incidental or ancillary to the main activity of my profession. So even selling off this will be business. Then activity or transaction in the nature of A. So again, they are talking about the main part. What is this C part saying? It is just clarifying that whatever you have done in A, it may or may not be done regularly, in volume, in frequency, continuity, makes no difference. It means even a one-time activity, even a small value activity, even less frequent or less regular activity will also be a business if it is in the nature of trade commerce. So let us say you take a coaching class of your group of friends only once. Whether that one-time activity of taking coaching will be treated as business, the law says yes. We have nothing to do with its regularity or continuity. Now, besides this, some specific activities are to be deemed to be business. What are they? Supply or purchase of goods, including your capital assets, in connection with commencement or closure. So many times at the time of commencement, you acquire something. Till now, the business has not started, but ultimately you are going to start business. Similarly, you have closed down the business and now you are selling off your asset. Now, question comes, if I sell off my asset after closing the business, anyways, I will say now I'm not doing the business. So will I have to not pay GST? Answer is no. So even if the assets are sold in connection with closure, it will still be treated as business. Next, wherever any club or society or association is providing any facilities to its members. So like our ICAI is providing benefit to members, that is chartered accountants. Then the housing society in which you are staying, it is providing benefits to you in the form of general maintenance. All this will also be treated as business. Next, when you go to a particular place, like you go to a zoo, you go to a historical monument, for entering that place, there is some ticket. So even this activity of allowing people to enter my place or premises for some ticket price is also my business. Next, services supplied by a person as a holder of an office. So where I am holding an office and this particular office which I am holding is in the course or furtherance of my business. Again, whatever remuneration I'll get is my business. Next, if a race club is doing what? It is simply giving license to a bookie to work in that particular race club. This activity of even giving a license will be treated as a business. And then finally, they say that wherever any activity is undertaken by government, even though they are doing this as public authorities, so activities done by government as public authorities are also to be treated as business. So students, this is what is the expansive definition of business. Now I come back to section 7.1. So we have studied the first part completely. What is 7.1a? Now, besides this, you have three specific transactions which are deemed to be supply. C we have done, which says whatever activities are specified in Schedule 1, even if it is done without a consideration, we will treat it as a supply. Similarly, import of service. Now, for import of service, first possibility is you are falling in A, that is, it is done in the course of business for consideration, or you are falling it in C, where it is done without consideration, but from whom the import is done from your related person or your establishment outside. Similarly, B also gives another carve out to import, which says that where it is done for a consideration, even though it may not be done in the course of your business, it means you are importing service at a personal level. So let us say I hire a interior designer from London, and I ask the interior designer to do the interior designing of my office, and I pay him a consideration. It will fall in A because all the limbs of A are satisfied. But let us say I ask the same interior designer to do the interior designing for my house. Now, it is not in the course of my business because it is for my personal use, but still it is supply because it is satisfying all the limbs of this clause. So there is import of service. I am paying a fees. The only thing which is not satisfied is I am not doing it for my business. I am doing it for my personal use. Still, it will be a supply. Now coming to double A. Now, students, double A was added very recently and it was done to overturn one of the Supreme Court's decision. What was that decision? So, students, there is a concept of mutuality. What is mutuality? I cannot sell to myself. Now, here, what is that mutuality point? So, let us say I am an unincorporated body. So, I am a club or an association, but not registered. Now, the moment you say I am not a registered, we all know that under general laws, an unregistered body and its members are one and the same. Now, the issue, the dispute which went to Honorable Supreme Court in the case of Kolkata Club said that wherever an unincorporated association is giving any goods or service to its members, since the unincorporated association and the members are one and the same, you cannot give service to yourself. Hence, that service will not be liable to GST. This was the decision because there is no supply, because for supply you require two separate persons, and an unincorporated club and its members are one and the same person. Now, to overcome this decision, clause AA was put, which said that where any activity or transaction by a person is done for the members or the constituents, and it is done for some consideration. So what is the only point which is missing is that the person and the members are one and the same. Why? Because the body may be unincorporated. But still, this double A says you will treat such activities done by a person. Now here I am reading it as unincorporated club for its members, and it is done for some consideration. This will also be a supply. And then in explanation, they have clearly overridden the judgment, saying that for the purpose of above clause, it is clarified that notwithstanding anything contained in any judgment of the court or decree of the court or tribunal, etc., etc., it will be deemed that the person and its members are two separate persons. So to override that judgment that there has to be two distinct persons, two separate persons, only then supply can happen. To override that, this clause AA has been inserted. So students, we have reached this point. Which point? We did part one. Part one is what is no supply. Now we completed part two. What is part two? Part two is dealing with the definition, scope, and conditions which will be necessary to be fulfilled to treat your transaction as supply. Now, once you fulfill these conditions, you fall in this inner box. And this inner box is finally what is supply, what will be leviable to GST. What is not supply is first this outer box, which is specifically treated as no supply. And second, what is not supply is this inner box, which is no supply because one of the conditions of supply could not be fulfilled by it. Please understand this, students. So once you understand this, the understanding of what is supply will be clear. Now, once we have understood what is supply, finally, after excluding the no supply items, after excluding those items which are not satisfying the conditions of supply, now we reach a stage where we have to classify the supply into whether it is of goods or of service. But here we take our break. We come back to this after our break. Fine, students? let us proceed. So we are discussing now the third limb of supply concept, that is the classification of supply. Now, what is classification? So basically, once you determine that a commercial transaction is a supply, the next step is determining whether it is to be treated as supply of goods or it is to be treated as supply of services. You will say, sir, why? GST is a common tax on both goods and services. Rather, now we have a single tax. Agreed. But you have to understand one thing, that even though GST is a single tax, however, the provisions under GST, like which we'll be studying in future topics, classification, exemption, time of supply, place of supply, and even in relation to some of the provisions of your ITC, there is a distinction between whether it is goods or service. So, in many of the procedural provisions like registration, raising of invoice, e-invoicing, in multiple such other provisions also, there is a requirement to determine whether what you are doing is supply of goods or is supply of service. So for the purpose of better application of the various provisions of the GST law, you are required to determine the classification, that is whether your supply will be supply of goods or whether your supply will be supply of services. Now, with this particular point in mind, let us proceed with our discussion on the classification aspect of supply. Now, there are two sections of 7 which determines this. So section 7.1 says that to determine classification, refer schedule 2, and section 7.3 says for determining classification, again the government will give notification. So in two manner you will be able to determine whether your supply will be supply of goods or supply of service. Let us start with schedule 2. Now in schedule 2, students, there are multiple transactions listed out, as you can see. Now for all these transactions, they have given on the right hand side whether it should be treated as supply of goods or it should be treated as supply of service. Correct? However, I have tried to simplify it. I'll give you a simplified approach of determining whether your supply should be treated as supply of goods or it should be treated as supply of service. So just note what I'm trying to say. So for the purpose of classification, what is given in schedule 2, I will give you a simplified approach. So first, you have to see whether your transaction is of a movable item. In your language, it is goods, correct? Now it is of movable item, then there are two possibilities. First, is there outright transfer of the property in the goods, or is it a temporary usage of goods? So where your transaction is such that you have outrightly transferred the property in goods, like you have sold the goods, you have transferred the goods, it will be supply of goods. But where you have given the goods for a temporary usage, like on rent, like on lease, but the entire property in goods is not transferred, it will be supply of service. Correct? So where there is outright transfer of property in goods, supply of goods, temporarily the usage rights of the goods are given, or the rights to hold the goods is given, or the rights to display the goods is given, but it is temporary. So most important part is temporary and outright. This decides whether it is supply of goods or supply of services. Same rule applies for intangibles. like patents, copyrights. So for intangibles, you apply the similar approach that wherever patents, copyrights, trademarks, your intellectual property rights, right? All these are given. The answer is dependent on this. Correct? Now, within intangibles, there is one more category, which is information technology softwares. Now, when it is information technology softwares, again, two possibilities, whether it is standardized or whether it is customized. So standardized are where you buy a standardized software off the shelf, like you buy Tally, or you have so many types of antiviruses. These are all standardized. Standardized means they are not made specifically for you. They are developed by the company and given it to everyone. Now again, within this same, whether there is outright transfer of the software, or you are only given right to use, or you are given a license to use. So when you buy a Tally software, you are given the outright, sorry. So in case of Tally, you are given the outright rights of the software. The Tally software which you have purchased becomes your software. But wherever you take any type of antivirus, that same antivirus license is given to multiple users. So it will always be this supply of goods, this supply of service, similar to the first item. So what principle we have developed here for movable, same applies for intangible, same applies for software. However, when we talk about customized software, in case of customized software, students, the provision is that whenever there is a development, there is an upgradation, implementation, anything of the software, it will always be supply of service. Then we come to immovable. Now, in case of immovable, if there is outright sale of land or completed building, it is, students, if you recall, no supply as per schedule 3. Other than this, all transactions of immovable property, like sale of under construction building, correct? Second, wherever there is renting, leasing, or any type of occupying the immovable property, it is always supply of service. So students, in case of immovable property transactions, there is first possibility, that is sale of land or completed building, it is no supply. And then all other possibilities are supply of service. So whether you sell under constructed property, which is under construction, or you give it on rent or lease, everything will be supply of service. Correct? Now, besides this, there are some unique one-time or special transactions. Now, what are these special transactions? Agreeing not to do something, or where you work on the goods sent by somebody else, which is called as job work. So all these are supply of service. So students, this is what is if I have to make a brief of the entire schedule 2, which is otherwise running into 5 pages, this is the brief. Correct? You can just take a screenshot of this so that when you read it alongside the schedule 2, it is easy to understand and recall. Fine. Hope you have taken the screenshot, right? So now let us go to the details of schedule 2, which will now sound much familiar and simple. So see, schedule 2, what you have done, outright transfer of title. It is supply of goods. Again, outright transfer of title or undivided share, but it is now done without transfer of title. So you have only given rights to use, not the complete title. Then it is supply of service. Then transfer of title again, but it will pass on at a future date, like in case of hire purchase. But still it is ultimately transfer of title, that is complete rights. It is again supply of goods. Then when you come to land building, it will always be service. So whether it is lease, tenancy, easement, or it is leasing, letting out the building, everything is service. Then this is job work, any treatment or process which is applied to other person's goods. So this is what I have called as job work service. Now we come to business assets. Again, where you permanently transfer or dispose of the business assets. That is, you have given the complete title in your business asset, it is supply of goods. But again, where you are only giving it for some use or you are making it available, but you have not permanently given away the title in the goods service. See the difference. If you apply the analogy which I have given, movable, intangible, software, immovable, all these things are fitting in those analogy. Again, goods which are forming part of assets of the business and I cease to be a taxable person shall be deemed to be supplied. Now this is a deemed supply, and since this is of goods which are part of my business, I have not sold it to anyone, but it is deemed to be a supply. Again, the law says we will be treating it as supply of goods. Again, renting of immobile property, construction of complex, that is before the construction is complete, you have booked it. Again, all these things are supply of service. Then temporary transfer or allowing someone to use your intellectual property rights. So same, this is what I've given in intangible, where you are giving a temporary right to use. Next, there is a design, development, programming, customization, etc., etc. of IT software. Next, agreeing to the obligation of not doing something, refrain from an act, tolerate an act, right? And transfer of right to use any goods. Again, you're not transferring the title, you're only giving the right to use. So see, all these are again supply of services. See, here they have not given in categories. I have given you in categories so that all these thing points gets covered at one place in a smaller outframe. Now, these students, you can understand that para 6 what covers is deemed. What it says, two activities will be always deemed to be supply of service. One is the works contract, and second is wherever you are running a restaurant or catering, all these services where what you are doing is you are supplying goods, which is what? Food. And this is done along with any service. So purely there is no sale of goods. It is along with service. Like in case of restaurant, there is a serving of food. Again for catering, there is a preparation and serving of food. So whenever there is supply of goods, which is food or which is article for human consumption or any drink, and it is done along with a service, then this will be treated as supply of service. Similarly, works contract, will always be treated as supply of service. So these two things will always be deemed to be supply of service, even though it covers or includes component of goods. In some cases, maybe goods component may be higher. Still, they are saying we will deem it as supply of service. Now, how is works contract defined under the GST law? They define works contract to mean, again, it is not inclusive, it is meaning what? Contract for building, construction, fabrication, completion, erection, installing, fitting out, improvement, modification, repair, etc., etc. So 14 acts are to be given, and these 14 acts are in relation to an immobile property. So what you are doing is relating to your immobile property, and for that immobile property, what you have done is repairs, construction, building, fabrication, all these things are done for the immovable property. So whenever it is done for the immovable property, it will be treated as supply of service. So works contract, which is carrying out any of the 14 acts of an immovable property. And second, restaurant, catering, that is supply of food along with service. These are always to be deemed as supply of service. Now relating to this, there are some clarifications issued, circulars issued. So first is of transfer of tenancy rights. Now what are tenancy rights? See students, in many places, like if I have to give you example of Bombay, the land or the properties over there are not sold. They are given on a very long-term lease. This long-term lease is what is called as tenancy. So in Bombay or in many places, there are uh, in Bombay or many places, there are this buildings, plots, which are not sold. They are given on 99-year lease. And that is what is also called in Bombay as Pagadi system. Now, whenever you are giving this property on lease of 99 years, you charge a lump sum consideration. That lump sum consideration is what is the first item, that is what is covered under GST, and it is to be treated as supply of service. So giving away your tenancy rights against a lump sum consideration, which is also called as pagadi, which is also called as premium, will be taxable under GST as supply of service. Now let me just remind you students, all these things are presently under dispute. So presently cases are going on in various high courts, including the Honorable Supreme Court. Maybe over a period of time, we may get some judgment relating to this, but as of now, the position of law which is clarified is it will be supply of service. Next, priority lending certificates. So they are in the nature of goods. Further, it is clarified that it is not to be treated as security and they are freely transferable duty scrips. So renewable energy certificates, REP license, etc. All these earlier attracted VAT. Now in GST, there is no exemption available to them, and that is why they are taxable as goods. So most important thing, they are not to be treated as security, and secondly, it is to be treated as goods. Further, nature of supply of PLC between banks is a supply of goods in the course of interstate trade. Accordingly, IGST is payable. That is okay. Next. Now comes students a very important circular. This circular we had discussed in the previous class also in relation to another discussion. Now comes the point of what will happen if you receive any liquidated damages. Now, when you receive liquidated damages or a compensation or a penalty, many times you do receive this because of breach of contract or because of breach of some condition. Now, whenever you are receiving this, a question arose that will it fall in that particular language which is agreeing to obligation to refrain from an act or tolerate an act. So if you have not fulfilled my contract conditions or if you have breached any of the contract conditions and still I'm allowing you against some penalty amount. So is it tantamounting to toleration of an act? This was a question raised. Now, this particular entire phrase, agreeing to obligation to refrain from an act, tolerate from an act or situation or to do an act, whether any type of liquidated damage is received for non-compliance with any of the contract conditions or for breach of any condition or breach of law, whether it will fall in any of these. So for this, now we have a specific circular which clarifies. First thing, now this is what we discussed earlier when we were talking about vouchers breakage, that is the vouchers which are unredeemed. So over there, I had given reference of the same circular, that what analogy we are drawing over there is coming from this circular. So first analogy, student, is that whenever there is some compensation like liquidated damages given to you. Why? Because there was some breach of contract because of which you suffered some loss or damage. To compensate for this loss or damage, whenever you receive any type of uh, penalty or liquidated damages, you have to keep in mind that there is no express contract to receive the damage. Means what? This is what I in fact discuss and explain at the end when one of the students has asked me the question last lecture. Ki, what is this? Ki, you are saying express contract, not express contract. So I gave an example. Ki, I have asked you to do a construction of my factory building within a time of 6 months. And I had put a condition, a clause, that if you do not complete it in 6 months, you will have to pay me damages at the rate of rupees 50 lakhs per month. Now, you completed the work in 8 months. So you exceeded the contract period by 2 months. And as per this penalty clause, you paid me rupees 1 crore. Now, can this 1 crore be said to be a consideration for me tolerating your delay? So this is what is clarified by the circular. It is saying there is no GST on this 1 crore because there is no contract to not do something or to do the contract late. So I did not enter into the contract with you that you construct my building late. In fact, I wanted my building to be constructed in time, and that is why I put a time limit. But at the same time, I had to put a breach clause so that either you don't breach because of this, or even if you breach, at least I'm compensated. So whenever I'm compensated for a damage, it will never tantamount to supply. So what is clarified firstly is that when I am merely compensated for my damage in the form of some penalty or liquidated charges, it will not be treated as a supply. What will be supply? When there is an express contract not to do something. Like I gave example, I enter into a contract with you and I say you don't conduct or you don't start a office in my area, and for that I give you 1 crore. Now this is an express contract to not do something. That is what is a supply. But where I have asked you to do something, this is the main contract, and also I have put a penalty clause. If you don't do it, then that penalty will not be a supply and there will be no GST on that. Now in this same circular, they have covered some specific penalties and charges. So many times the bank levies this penalty. So you have issued a check to someone and because of some reason, the check bounces. This check bounce many times is charged with some fee, with some penalty. The question is whether check bounce will be treated as any type of supply. So if I apply the same analogy, whether my intention was that the check should bounce and I should earn out of that, answer is no. In fact, I wanted the check to be honored, but for some reason it got dishonored and hence there is a penalty. This check bounce penalty cannot be treated as a consideration because there is no supply, hence there is no GST. Next, many times you violate laws. Simple example, traffic laws. You were supposed to not enter a particular lane because it is one way or the entry is restricted, but you entered there. You put your vehicle, you parked your vehicle in a no parking zone. In all such cases, the government or the authority is imposing some penalty or fine. Again, the rule is that penalty or fine imposed cannot be said to be a consideration of any supply. Because again, my requirement was not to do something. I had asked you not to park it here. I wanted you not to enter this, but you entered. So when you are doing opposite, and that is why a penalty is charged, it will never be leviable to tax. Similarly, forfeiture of salary or payment of bond amount. Now, what is this? So many times what happens, you enter a particular company, you take up a job. Now the company says, if you leave before 2 years, I will charge some amount. Or if you don't give me notice period, I will charge some amount. And for that, many times they take a bond at the start so that if you breach any of this, I will encash the bond. Now, let us say actually you breach one of these points, and that is why the employer company takes some amount from you, either specifically or through realization of the bond. Can it be said to be consideration for any supply? So, again, the answer is no. There is no consideration for any service, because again the company did not want you to leave, and that is why this restrictive condition was put, that if you leave before 2 years this will happen, or if you don't give me notice of leaving, I will deduct so much amount. So actually the contract was of you continuing the service, but for breach I had put a negative clause. Now if you have actually breached one of the conditions and I'm charging something, it will not be taxed. Then comes something called as late payment charges. Now, late payment charges are something different. So, what is late payment charges? So, you are required to make payment up to a particular date. But if you make the payment late, I will levy an amount in addition to my original amount. So, in particular case where you have made payment late, if you remember section 15, or if not, we'll study that in valuation chapter. There also it is said that whenever any consideration is received late, it is to be treated as part of the value of original supply. Same thing is clarified, that whenever any late payment is received, it will be treated as part of the main supply and it will be taxed as if it is the main supply. So firstly, receiving money late is not any separate supply or service, but it is to be taxed as a part of the original supply. So if original supply is of goods, it will be taxed as goods. Then in your electricity bill, you have a minimum charge or a fixed charge. A question arose that what will be the tax treatment of this fixed charge? Please remember one thing. Presently, electricity has been exempted from GST. Hence, whether your component of the electricity bill is a fixed charge or it is a variable charge, which is dependent upon how much electricity you have used. Both are sale of electricity, and hence for the time being they are exempted from GST. Now comes an important point. What is this important point? Many times you book some facility, like you book a hotel, you book a flight, or you book a train, anything. And then just before the time you are supposed to avail this service or facility, you cancel it, which is again part and parcel of the original contract. That the flight ticket says that if you cancel before 24 hours, I'll pay this much refund. If you cancel before 5 hours, I'll pay this much refund, and so on. And this is again in many of the cases. So either there is some partial amount which is refunded, or maybe nothing is refunded, entire amount is forfeited. Now the question is, when any facility you had booked, which you are going to avail on a particular date in future, but before that date, before availing the facility, you cancel the facility, and the agency or the supplier is retaining back some amount and taking from you the charges for this cancellation, whether the cancellation is taxable or not. So here again they are saying, don't treat cancellation as an independent supply. It is similar to our previous point of late payment. So here you have cancelled it, and this facility, the facility allowing cancellation against the payment of cancellation charges, is nothing but a part of the original supply. So it is like a another facility, like how I have given you the facility that you can come and stay in my hotel. Along with it, I have another facility that you can even cancel this stay for some charge. So the facility is given by the supplier. It may be supplier of the transportation service or the hotel service, and it is a part and parcel of the principal supply. So hence, the answer given is that the forfeiture of this, the forfeiture amount or the non-refundable ticket amount, which is now cancelled because you have failed to avail my facility of travel, tool, hotel accommodation, it will be treated as same as the original supply, and in short, the tax will be levied on this cancellation amount similar to the original supply rate. However, another point is forfeiture of earnest money by a seller in case of breach of an agreement to sell. So whenever, let us say you have booked a flat and you have paid some amount and the builder has entered into an agreement to sell. Now, if before the flat is complete and you take the flat, for some reason you decide not to buy the flat and you cancel that particular facility. Now, in this case, whatever amount you had paid at the start, the builder may decide to forfeit that amount. Now, if there is forfeiture of this amount and the forfeiture money stipulated in such cases not as a consideration for tolerating the breach of the contract, but as a compensation for the loss suffered and as a penalty for discouraging non-serious buyers or bidders. Such payment being merely flow of money is again not a consideration for a supply and not taxable. So students, this is the main circular in which all the above pointers are covered. Now on similar lines, another circular had come which dealt with penal charges levied by regulated entities. Now, what are regulated entities? So, regulated entities are bank, non-banking financial companies, etc., which are regulated by RBI. So, RBI has given them instructions what that they cannot use penal interest wherever loan terms are not met. Now, what these banks have done, because RBI have instructed not to charge penal interest, so instead of that, instead of penal interest, they started levying, instead of penal interest, they started levying additional amount. So now the issue arose that whether the penal charge is so levied is in the nature of payment of consideration for tolerating an act. So this new circular, following our previous circular number 178, stated the same thing, that my essence was that you perform the contract, not you breach the contract. So my main intention of entering into this deal was that you perform the contract. However, if for some reason you fail to perform it and for that I have imposed any charges, those charges will again not be leviable to GST, because again my intention was that this contract should be performed and I had a penalty clause. So if any type of penal charges are levied, that will not be taxable. Next, applicability of GST in respect of warranty replacement of goods and in case of replacement of parts or providing repair services during the warranty period. Now understand this, students. In case of warranty, there may be three parties involved. What are the three parties? One is the original equipment manufacturer. The other is the dealer, and you are the customer. Now let us say I am the dealer. You purchase from me a television set for rupees, let us say 5 lakhs. And this television set has come with a warranty that if anything happens in the first year, it will be repaired free. The parts would be replaced free. Now, I have given you this warranty, but this is not my warranty. This is the warranty of the original equipment manufacturer, that is, let us say, the Samsung company. Now, in such cases where the Samsung company TV, I am the dealer and is sold to you, and tomorrow, if there is any type of problem in that and any warranty is initiated by you, I will have to provide the repair replacement free. Now, in this case, what are the issues? The first issue is where original equipment manufacturer has offered the warranty for the goods supplied by him to the customer and provides replacement of goods or parts and repair services to the consumer during the warranty period without separately charging any consideration at the time of such replacement. Whether GST would be payable on such replacement of goods or parts or supply of repairs without any consideration. Now, what is this point? If I have provided you warranty, now who am I? I am the Samsung company. And actually, some problem comes. So you come, you give the TV and I repair it free. Maybe I replace some part free or I replace the entire TV free. whether there will be any GST applicable on this. So for this, the clarification is that the value of original supply of goods, that is a TV which I have sold, is already including the possible cost of replacement. So every manufacturer estimates that there will be 5% problem or 10% problem. And whatever is the problem envisaged, they incorporate the value of that in all the TV sets. So this is what is the presumption by this circular, and hence again, no GST will be charged on the goods which are replaced by the manufacturer free of cost, because the value of those goods have already been covered in the value of original TV set. Next, second possibility is the distributor provides warranty on behalf of the manufacturer. Now, in first case, the manufacturer was doing the entire warranty. Now, let us say manufacturer has sold to distributor. I have sold the TV to you, and while selling the TV, I have given you warranty. But this warranty which I am giving to you is given to you on behalf of the manufacturer. Now, whether GST would be payable on replacement of parts, again the answer is that again there will be no consideration being charged by the distributor from the customer. Hence, no GST is payable because your case is under warranty. However, if any additional consideration is charged, so let us say besides warranty, if you want some additional thing to be done, obviously I'll charge you additional. So wherever any additional consideration is charged, GST would be payable, but only on the additional consideration and not the total amount. Now, taxability of transaction activity undertaken between distributor and manufacturer. Now, above two cases were manufacturer to customer or distributor to customer. In both cases, the answer is same. There is no GST on the free replacement done or the free servicing done. Now comes the second part. What will be the possibility between the manufacturer and the dealer? So first possibility, dealer replaces the goods or the parts to the customer under the warranty either by using his own stock or by purchasing from a third party and charges consideration for the parts so replaced from the manufacturer. So what I have done, you have come for warranty to me. I have given you warranty free. This is not taxable. This is covered above. But between me and manufacturer, since this warranty was not my warranty, it was manufacturer's warranty, but I have executed it. So whatever parts I have used, whatever work I have done for you, I am charging that to the manufacturer. Now this I'll be doing by issuance of invoice. Now, since I'm charging for the free warranty given to you, I'm charging it to the manufacturer. Between me and manufacturer, there is tax. I will be levying tax on the manufacturer. Second, distributor raises a requisition to the manufacturer for the goods or parts, and the manufacturer provide the said goods or part without separately charging. Second possibility is when the TV comes for repair to me under warranty, I inform the manufacturer, see boss, this TV has come. You had given the warranty. Now certain parts have to be replaced. You send me the parts. And the manufacturer sends me the parts. Obviously, when the manufacturer is sending me the parts, it is sent without any separate consideration. Why? Because this is the commitment given by the manufacturer. Now, since there is no amount charged by the manufacturer to me for sending the parts, there is no GST applicable. Next possibility is distributor replaces the goods or parts to the customer under warranty out of supply already received by him from the manufacturer, and manufacturer issues a credit note. Now, what it means that I have provided the warranty to the customer, I am the distributor, and for providing this warranty, I have used the parts which are already I had purchased some time back from the manufacturer. The manufacturer had already sold the parts to me, and I'm using the parts. Again, for these parts, I need money from the manufacturer. So what? I ask the manufacturer, boss, you send me a credit note to adjust the amount of these parts. Now, since there is a credit note, the tax liability pertaining to the credit note will be reduced. Next, distributor replaces the goods or parts to the customer under warranty by using his own stock and then raises a requisition to the manufacturer for the goods or part. The manufacturer then provides the said goods or part to the distributor. So I first use goods from my stock, and now I'm sending the list to the manufacturer. See, these parts I have used, you replenish back the parts to me. So there will be no GST on the replenishment of the part by the manufacturer to me. Third possibility, distributor provides repair service in addition to replacement of parts. Now, till now, we were talking about replacement of parts. Now, what if the distributor is providing a repair service? So in such a scenario, there is a supply of this repair service by distributor and the manufacturer is the recipient. So distributor will charge GST to the manufacturer on the repair service. Then comes extended warranty. Sometimes company provides offer of extended warranty to the customers, which can be availed either at the time of original supply or just before expiry of the standard warranty. Now, what is the GST implication? So let us say you come to buy a car. The car is having 2 years warranty included, but the dealer says, "Ki boss, if you pay extra 15,000, I will make the 2 year warranty 5 year warranty." So this extra 3 years warranty is the extended warranty, and there is a charge for it. Now, first possibility, customer enters into the agreement of extended warranty when at the time of original supply. So when he had come to purchase the car, at that time itself, he has extended the warranty. So the extra 15,000 which I am charging to the customer for this extended warranty is to be treated as part of the value of car because it will be treated as a part of composite supply, principal supply being the supply of car. So GST would be payable on this 15,000, that is the extended warranty amount, as part of the value of car. Second, in case where the consumer enters into an agreement of extended warranty, but not at the time of supply, after the supply. So let us say today you purchase the car, you don't avail the extended warranty. After some time, 1 year or 2 years, you come back to me and say that I want to take that extended warranty. So I charge you 15,000. In this case, this extended warranty becomes a separate supply, separate or distinct from the original. And now the GST is applicable as supply of service, not as supply of car. Then students, sorry, another circular is relating to preferential location charges. So many times when you book a flat or a plot, many times the builder says that if you are booking this flat or plot or shop, there is a premium charge on it. Why? Because it is road front, it is sea facing, it is on some particular height. So for that preferential location, the builder is charging you extra amount. Now the question is, what is the treatment of this extra amount? The answer is, it is to be treated at the same rate as is the main supply. So if main supply is exempt, this will be exempt because it is post completion. And if the main supply is taxable, this will be taxable. But most important, it is taxed as a part of the main supply. So again, the principles of composite supply are followed. Is this fine, students? So students, with this, we complete the entire concept of supply, right? Technical support, are we going to take questions now? Technical support, do I have to take questions now? Okay. Students, will continue. Now in this chapter, we are going to another important concept, composite supply and mixed supply, which is covered in section 8. Now section 8 deals with a specific scenario where there is a combination is of goods plus goods, service plus service, or service plus goods. Means what? What you are buying is not a single item, it is combination of different items. Now, when you are buying something which is combination of different items, but you are buying it together, and maybe the supplier is quoting you a single price or maybe separate price, whatever. The question is how to tax it, whether it will be taxed independently or it will be taxed as a collective combination. Now here you have to first go back to our schedule 2. In schedule 2 in para 6, two types of combination items was given. One was works contract and one was restaurant or catering service. Now for both these, it said that it has to be treated as supply of service, which means that for both these type of combination supplies, the law was very clear in schedule 2 itself that they have to be taxed as a new item like a works contract service or as a restaurant or catering service. But other than these two specific items, for all other supplies, wherever there is a combination of goods plus goods, service plus service, or goods plus service, how it is to be taxed? For that, we have Section 8. Section 8 says that whenever there is a combination of different items which is supplied together, you have to test, can it be called as composite? Can it be called as mixed? If it is to be treated as composite, then the rule is on the entire value, you will tax or you will take the rate which is applicable to the principal supply. It means the entire combination will be treated as the supply of the principal item. This is if the supply is determined to be a composite supply. However, if the supply is determined to be a mixed supply, then on the entire value, you will tax or you will treat the supply as the supply of that one item which is having the highest rate of tax in that combination. So let us say at the time of Diwali, we find that there is a basket made which covers or includes maybe sweets also, cold drinks also, different types of chocolates also. So nowadays, different types of combinations are made. Now, in such case, one is attracting zero rate, one of the item is attracting 5%, one of the attracting 18%. In such cases, the entire package will be taxed at 18%. That is at the rate of that one item which is attracting highest. But if that supply is to be treated as composite, then we will not see the highest rate item. We will see that item which is the main supply. And the rate of the main supply will be applied to the entire package. Now the treatment is simple. Composite will be taxed at the rate of principal supply. Mixed will be taxed at the rate of highest rate supply. But the question is, what is composite? What is mixed? So for this, we go to the definition. Composite is to be treated as when there are two or more taxable supplies and these are naturally bundled and supplied in conjunction with one another in the ordinary course of business. So in order that the combination or the package is treated as a composite supply, the first requirement is it should consist two or more taxable supplies. Secondly, this combination, what I have made, is naturally bundled. And these items are to be supplied with one another, that is required because they have that complementary characteristics. And this combination is done in the ordinary course. Means it is a normal feature of my industry to make such combinations. So, like we were taking example of buying a flat and the preferential location charges was treated as a composite supply. Why? Because when you go to buy a flat, it is a common feature that depending upon the special location, the height, facing, there will be some extra charges. Similarly, along with the flat, nowadays you have a compulsory parking. You have some additional compulsory amenities which are naturally bundled because they are nowadays part and parcel of the entire supply. And most important, out of all these items in the combination, one of the item is your principal supply. Now, what is a principal supply? Principal supply means the supply of that goods or service, which is your predominant element. And the remaining items are the subsidiary or ancillary. So what is a principal supply? Principal supply is that supply or that item which holds the predominant element. That will be called as principal. And most important, remaining items in the combination are subservient. They are just supportive. Then the main item is the principal supply. Now, in composite supply, what is also important is to determine that what you have bundled is naturally bundled and naturally bundled in the ordinary course. Now, how to determine this? So for this, there are some criterias to be tested. If these criterias, one of them or more than one of them are satisfied, you will treat it as naturally bundled. What are these criterias? Perception of customer. So most important criteria is how customers look at this particular package. Whether the customer perceives, whether the customer believes that yes, I will be given this. For example, whenever you go to buy mobile handset, it is the perception of the customer that mobile will come with battery. There will be no separate charge for battery. So then battery will be called as a composite supply, or mobile and battery will be called as a composite supply. Similarly, when you go and you are watching a movie, many times it is a trend that majority of the service providers in that particular area of business are bundling. What are they bundling? That in the movie ticket price, they are including popcorn and one of the beverages. So in this case, the second way of identifying naturally bundled is whether majority of the suppliers are doing the same bundling. So first, how customer is looking at, whether the customer perceives that this bundle will be given and this bundle will have all these items. Second criteria could be what the majority of suppliers in your area are doing who are in the same line of business. Next, the nature of the services which are bundled. Means what? Bundling is done of those items which are complementary. Complementary means that out of this, one of the services main and the other services which are combined are such that they are supporting the main. That is, they are helping in better enjoyment of the main. Correct? Like for example, you are traveling by Rajdhani. So in Rajdhani, you are given food, you are given water bottles. In maybe premium class, you'll be given the wet towels, etc. So these are what complementary items. They are done for better enjoyment of the main service. Similarly, when you go to a premium hotel, you are given various toiletries which are of very premium quality, but that helps in better enjoyment of the main service, which is accommodation. So when I'm going for accommodation in a premium hotel, I know that yes, I will be given multiple of these items which will make my experience better. Some more illustrative indicators could be that there is a single price or the customer pays the same amount no matter how much of the package they actually receive. So it means again, as per customer perception, they will have to pay this price and it will cover all these items. Again, the elements are advertised as a package. So whenever you are seeing the advertisement itself is showing that along with razor, a blade will come. Example. Then it will be treated as composite. And next, the different elements are not available separately. Now, this is again interesting. Many times you will find that along with particular medicine, the dropper or the particular cap which is used for like eye drops, etc., that will come along with that only. It will not be available separately. If let us say that nozzle or cap is somehow destroyed, and if you go to the medicine or pharmacist and say that only give me the nozzle or cap, they will say, sorry, it is not available separately. So this is also an indication or the way of looking at it, that whether it is naturally bundled and hence it is a composite supply. Then students, the next category is mixed supply. What are mixed supply? Two or more individual supplies. So here again there is more than one individual supply, or there is a combination which is made in conjunction with each other by a taxable person, and most important, it is compulsorily for a single price and it is not amounting to a composite supply. So where there is combination of two or more items, for one price. And most important, this is not making it a composite supply. It means the characteristics of composite is missing. In such cases, the supply will be called as a mixed supply. Correct? Now, students, there are some clarification relating to the composite and mixed supply concept. Let us go to them. So in relation to printing, what happens is that when you go for printing, the person who is called as the printer, he is doing two things. One is he is using the paper, that is the material, and the second is he is using his printing service, which may include the ink, the entire printing machine, the entire system. Now, using both this, he gives you a printed material. Now, the question is that whether this printed material is to be treated as supply of goods, because the major part or the visible part is the paper, or it is to be the service because the intention was to get it printed. To answer this, the circular issued has divided the case into two categories. What are the two categories? That where it is printing of items like books, pamphlets, brochures, etc., where content is supplied by the publisher or the person who owns the usage rights, and the physical inputs like paper, ink, etc. belongs to the printer. Here, the principal supplies service. So what it means that what content is to be printed is provided by me. So I am, let us say, author of a book. I have written a book on real estate, GST. Now the entire content is mine. Now when I go to the printing person, yes, definitely for the book, entire paper, the ink, the outside hardboard, everything is of the printer, but the content belongs to me. I am the owner of the content and I have the IPR rights of the contract. In such a case, I have the intention of getting the content printed. My intention is not getting the paper. Paper is the medium so that my content can reach out to people. But my intention in this is to get the printing service from the printer. Hence, it is to be treated as supply of service. Whereas, if it is printing of envelopes, letter, cards, boxes, tissue, napkins, etc., where the printer is using the physical inputs, again, which includes the paper, etc., and it is also creating the design, etc., the design or the logo may be supplied by the recipient. Here, the predominant supplies of goods. Why? Because here your intention is mainly to get the envelope. You are getting the logo printed on it. Why? Because you want anybody receiving the envelope to know that it has come from you. But here your intention is not the printing. Here your intention is the goods that you are going to use, like the boxes, like the envelopes. So basically in this, what is the main intention? Whether the intention is the printing or the intention is the underlying goods, that will decide the nature of the supply. So in first place, it is the service, which is a printing service, which is the underlying item. In the second case, the goods that you are getting, that is the letter card, the boxes, the tissue papers, napkin. This is what is important. Yes, you are getting some logo or name printed, but that makes no difference because your intention is to buy the vastu, that is the goods. Hence, it is supply of goods. Further clarification, when a patient is admitted in the hospital, now along with the stay, the patient is also provided food. Whether this food is to be treated as a separate supply or a composite supply. So the answer is food which is supplied to inpatient, which is as per the advice of the doctor who is treating you, will be treated as part of composite supply of healthcare service. And since healthcare is exempt, this will become exempt. However, where the food is supplied by hospital to non-inpatient, that is outpatients, or to their attendant or visitors, it is a separate supply and hence it is taxable. Next, in case of building, there is a supply of goods and service, and here the classification of this composite supply would depend upon the facts and circumstances of each case. So bus bodybuilding can be both supply of goods and supply of service both. Then the next concept is retrading of tires. Now in retrading of tires, where the predominant element is the process of retrading, it will be supply of service. However, where old tires belong to the supplier of retraded tires, it is supplier of goods. So again, students, what is to be seen is the main intention of the supply. So where the tire belongs to you and you are coming to me only for the retrading, so you are coming for the service, it is supply of service. Where tire also belongs to me and I purchase old tires, do retrading and then sell them as good tires. In such cases, my intention is to supply the tires, hence it will be supply of goods. Next, supply of food and beverage at cinema halls, taxable as restaurant service. Now, importantly, eating joint is a wide term which includes refreshment or eating stall, kiosk, etc. And it includes these things put in cinema hall also. Now, the cinema theater may run these refreshment or they may be given on contract to a third party. Now, what is the clarification? Supply of food or beverage in a cinema hall is a restaurant service as long as the food beverages are supplied by or as a part of service and the supply independent of the cinema exhibition service. So where there is a separate stall put inside the cinema theater from where the people coming there can buy food articles, it will be treated as an independent supply, independent of the cinema exhibition service. However, where the sale of cinema ticket and supply of food beverages are clubbed together, such bundled supply satisfy the test of composite supply, and now the entire supply will attract the rate applicable to cinema service because it is the principal supply. So students, this is how the entire concept of mixed supply and composite supply is to be understood. So students, we have understood this very important concept of mixed and composite supply. Now I keep the session open for your queries and doubts. Sanketji, we can take up queries of the students. Sanketji, I cannot hear you. Sanketji. Sir, so I am saying now we are open to take the queries of the students. From my side, I have completed it. I have kept the last 10 minutes for queries of students. अच्छा, मुझे शेयर करनी क्या? मुझे लगा आपने शेयर कर दी स्टूडेंट से. So I have to share the number on the screen, correct? Okay, students, I am sharing the meeting ID on the screen. You may use the meeting ID to join. So kindly join using this meeting ID so that you can ask your queries, if any, to me directly. Students, you may unmute and ask your questions if there are any. Questions if there are any.
Yes, sir. Rather this side.
Please tell me.
Yes, the first query with regards to purchase. Am I audible?
Rather this side.
Please tell me.
Am I audible?
Yes, the first query with regards to purchase.
There is repetition or your voice better. I don't know why I'm.
Yeah, even I'm getting that echo. I don't know why. Is it fine now?
Yeah.
Okay. So I was asking about purchase of lottery ticket under actionable claim. Like, what is its consequences?
So, but lottery tickets are actionable claims, na? Because if you have won the lottery, you can claim that amount from the lottery company. So it becomes a claim because there is a debt now. The lottery company owes you that money, correct? And if they are not paying, you can file a claim. So it becomes a what you say actionable claim.
Got it. Sis, you were telling about secured debt. How it is derivative? I didn't get it.
Means what?
You were saying that banks assign that secured debt under the derivatives part.
No, but see, PLSC, I think you're talking about. That is what is specifically provided in the banking regulation that it will be treated as a debt. It will be treated as a PLSC will be treated as not. No, if you're talking about PLSC, then it is priority lending certificate you're talking about. Then it is not treated as a
On the
security.
derivatives section, you were talking about that they were assigning the secured debt and all. So that was the thing. Derivatives, specifically derivatives.
So in derivatives, what is your query about secured debt?
You gave the example of the banks, assigning and all. Yeah, implications on secured debt. Yes, exactly. That one.
So exactly. So the point is, I am a bank. I have given loan to 1,000 people, right? Now,
Yes.
many times it happens that the bank is not able to manage the loan. Manage means recover the loan. So nowadays we have something called as asset reconstruction company, which purchases the debts from the bank. So out of 1,000, I sell 500 of my loans to that particular asset reconstruction company, and I ask them that you collect the loans from them, right?
Okay.
Here,
Yeah,
what bank has sold is it has sold its debts, and debts are secured creditors.
got it. That is as like factoring kind of,
So they
how
are
it is.
saying it is like a derivative, and hence there will be no GST.
Okay. Yes, that like as a factoring, na in the factoring provision, how they are
Sort
like.
of, sort of.
Yeah,
Correct.
yeah, that's okay. Fine. The next one, you said about distinct person. So, sir, even though they are like providing the free services and all, but can ITC would be, of course, ITC would be availed by the main person, right? So,
Correct. So ITC is available. Na? See, we are still on the side of the supply that when one branch sends goods or service to another branch and both are having separate GST numbers but under the same PAN, we call them as distinct person. Correct. Last year lecture also we understood this. Now,
yes.
when one branch is sending goods or service to another, Schedule 1 says you will treat it as a supply. So the seller branch will be charging GST and the recipient branch will get the ITC. There is no challenge with the ITC.
Okay, so therefore the GST would be automatically applied and the ITC would be claimed by the main person who is supplying, right? That is the thing
No,
which
beta.
was.
Supplier charges GST, recipient claims the ITC.
Yes, supplier charges the GST and recipient would be getting the GST, so no issues in that.
Correct, correct.
Okay, that was the only thing. Sir, import of services you were saying about the other cases, I didn't get it. What kind of other cases?
See, the other cases are that in case of import of service, if it is without consideration, that is, if it is to be covered in Schedule 1,
Hmm.
Schedule 1 says that there are two conditions. One, I should be importing the service from my relative or my own branch outside India. So that branch should be sending me the service, supplying me the service. And second, it should be in relation to my business. Now,
Okay.
if both these conditions are satisfied, it falls in Schedule 1 and it is deemed to be a supply. But if any of the condition is not satisfied, then it will fall in other cases. Other means where the condition is not satisfied. In that case, it will not be a supply.
Okay, got it. Not a supply, then no GST, of course.
Perfect. No supply, no GST.
Yes. Sir, with regards to holder of office, what kind of business you are talking about? Now I'm not
It is
remembering.
not business. It is not business. So let us say I am a hosiery merchant,
Hmm.
right? And I am also the chairman of a hosiery association. So this is holding a position which is in relation to my business.
Okay, but that means what is the GST implications in that? That
So
was
if I'm providing any service in that case, then that service will be leviable to GST. That is what is the point.
okay as a part of holder of the office. So you can,
Yes.
okay, got it. Sir, about the unincorporated body, what kind of person you were talking about? Like about the Kolkata
Clubs.
club? Yeah.
Club. So see, you know, club. Club means group of people coming together for a common purpose.
Hmm. Yes.
So you have a sports club where people come together and they say, okay, I am starting this sports academy where all our members will come and enjoy. So we have places like in bigger cities, you have places which are called as clubs where the people who are member over there can go and enjoy the facilities of the club.
Okay. So yes, so no, you were telling about the Supreme Court verdict about it. So
Yeah.
then it is right now.
So
It is
if
yeah.
a club is an unregistered club,
Yes.
now the general rule anywhere is that if an unregistered body, correct?
Mm-hmm.
If a body is unregistered, it is not different from its members. So members and the bodies are one and the same.
Correct. Yes. So
Correct?
that was having contradiction with this CGST Act. So that's why I was
Yes.
asking.
So the CGST Act was amended to now say that even though they are the bodies unincorporated, we will treat it as a
Like
supply.
as a separate person, like
Yes.
distinct person, you can
No,
say.
don't call it as distinct, call it as separate because distinct person has a different meaning in GST law. So call it as separate.
Okay, as a separate, that is not being even defined under GST. So we are
Yes.
just treating it as.
It is deemed that they are separate and it will be treated as a supply.
Okay, and final three queries. With regards to just a case about since you were saying that the company takes the bonds from the employees to provide.
Hmm.
But now, if it's on the employee to pay that amount, okay. But now, if the company is mistreating and the employee is leaving the organization due to this kind of thing, then what would be the GST implication, whether it would be there or not?
See, the point is that where the employee is leaving and the company is having a bond and the company is deducting the money from the bond,
Hmm.
correct?
Hmm.
Then it will be not tax. This is what the clarification is saying. Now, here, what you are saying, the employee is leaving because of mistreating, because then that becomes a question to be disputed. It is whose fault? The point is not it is whose fault. The point simply is that once the company is charging some amount to you because you are leaving, whether that amount will be taxed, so they have said it will not be taxed.
Okay, as simple
Whoever
as.
mistake it is.
Yes, sir. Just out of curiosity, I asked. Then the another one was with regards to electricity charge. Why it is exempted from GST? What is the point of that
Maybe
exemption?
because the government feels it is a basic necessity, so let us keep it tax free.
Oh, okay. Specifically, government has the power to keep this out of the purview of GST.
Yes, so when we'll study the exemption chapter over there, the law has given government the power to decide what should be kept outside GST.
Okay. And the final query with regards to repair service, which manufacturer before distribution, right? You were telling about that. Then why the GST is being levied? That was unclear.
See, I have sold the TV to you. Now, this TV is having a warranty given by the Samsung company, correct?
Yes.
But you will come to me, you will not go to the Samsung company, you will come to me. When you
Yes.
come to me for the servicing, there are two components. One, if there's some part has gone bad, I have to replace the part. And maybe I'll require to do some servicing, some repair something in the TV. Now, all these things I'm doing free to you because you are having the warranty card. But
Hmm.
for me, I am going to charge the amount to the Samsung company because I am not given that facility. That facility is given by Samsung company, but I have to execute it because you are coming to my shop, correct?
Yes.
I am not charging you, but I will be charging that amount to the Samsung company. So if I am charging the amount to the Samsung company, then GST is applicable on the amount which I am charging to the Samsung company.
Generally, which personally I underwent with regards to it, that even I have my Samsung phone, so it was having some issue. So I went to the shop and they charged me with the invoice including GST. So I was like, why
Now,
they are
no, no,
charging me?
so see, that is also clear over here. That was also covered where the dealer itself is charging to the customer. See, point is what? Dealer has done something for you.
Yes,
The servicing is an activity done by the dealer for you. Now,
yes,
if you are covered under warranty, dealer will not charge you, but the dealer will charge the company. That is also taxable. Only the difference is dealer will raise invoice on the company.
yes.
But if it is not covered in warranty and dealer is charging you, then the dealer will raise invoice on you. So in simple words, whoever is going to pay for that, that person will be also charged with GST.
Yes, sir. I was being covered under warranty within 1 year, but still they charged and raised the invoice
Better
of.
than that, I don't know. See,
Yeah,
now
that's
again, you are talking
yeah.
about a different. It is depending on facts of your case.
Correct.
We are
Yeah.
only discussing on the GST part. The
Yes.
answer is simple. To
Yes.
whomsoever I will charge. If I
Correct.
charge you, GST is applicable there. If I charge to manufacturer, GST is applicable there. What is right, what is wrong, then that is again a point of dispute, that whether they should charge you or not, then that has to be decided from the facts of the case.
Yes, sir. This solves all of my query. Just one out of curiosity, last time you just asked me whether I'm a repeater or a first timer. Just wanted to know why you asked that. Just for my
No,
knowledge.
no, that was I would have asked that with every student because it was our first class. But
Yeah, yeah.
since we were engaging for a longer period of time, so I thought I'll first ask you.
Okay, sir. No, it's the first time, so I just want your guidance with regards to like how to go into the barracks and all because
Definitely,
it
we will be guiding you throughout the session. Don't worry.
yeah, no, right now I'm little overwhelmed by GST and direct tax, honestly. So that's why I wanted to know that can you please guide me how to simply go into that? I'm writing running notes, that's a different thing, but direct I am not getting it how to refer it. Just guide me on
Don't
this.
worry, ma'am. In the last lecture had clarified that when you refer our module, you'll
Yes.
find that at the start of every chapter we have printed the bare act. And the
Yes.
best part is we have printed only the relevant bare act because
Hmm.
the
Hmm.
bare act, even if you try to go to the original act in the
Yes.
form it is, right? They have all the sections at one place, all the rules at one place. But what is relevant to this particular part, it will be difficult for you to identify. So for reading the bare act, this is what we have done in our module, that we have covered both the simplified language for easy understanding, but at the same time, we believe the student should know the original act in the original language. So we have even covered it in the statutory provisions. So the
Hmm.
first part of every chapter, the heading will be statutory
Statutory
provision. That is the
provisions.
bare act. So you
Yes.
simply read that. That is sufficient at this stage.
Yes, sir. Even last time, with like they told, ma'am told me that CBIC website it's not working. I was not getting the direct, honestly.
So
The
don't worry.
ICAI material only I downloaded.
That's why I'm saying you only refer our material for the time being. That is sufficient, beta. Right?
Okay, sir. Yes, sir. Thank you
Yes.
so much, sir.
Okay.
Done.
Yes, Kanaya, beta.
Good morning, sir.
Good morning, beta. Please tell me.
Sir, I have a couple of questions. Like, sir, whether goods include all actionable claim or specified actionable claim?
No, goods includes all actionable claim. And then we go to Schedule 3, where we have removed all other actionable claims and we have kept only specified actionable claims under GST. So goods includes all, but when we come to Schedule 3 has kept all the actionable claims in no supply and it has only kept the specified outside. So the net effect of both these, the definition of goods and Schedule 3, the net effect is only specified becomes taxable.
Okay, sir. Okay. And only specified claim. Sir, when you talk about the director providing service to distinct person in the same
Director
business,
providing to distinct person or related person?
sir, related distinct person, sir.
No, beta, there are two different things. Distinct is different, related is different. Director and
Sir,
company are related persons. And the company
okay,
having multiple branches, the branches are distinct person.
right. So in that case, a director providing service to distinct businesses of same entity, sir. So
Okay.
in that case, sir, is it taxable or
It is
ex- uh,
taxable, beta. It is taxable.
but sir,
Because
director and
for the director, all the branches are the company only, na?
hmm, right. So sir, in that case, employer-employee relationship also exists in that case, sir.
Correct. So see, directors are of two types. One is the full-time director who is employee. When it is a full-time director and employee, anyways, you are out of GST because of Schedule 3 at the start itself. That is why
Hmm.
I first explained Schedule 3 because you have to first keep Schedule 3 people outside GST. And on the
Okay.
balance, you will apply the remaining provisions. Now, if you are a whole-time director, so you are in Schedule 3, you are outside GST completely, then you will not come and see Schedule 1.
Okay.
That is
In
why
that
our sequence is to first go to Schedule 3.
okay. So sir, in that case, sir, the director having fees relating from 194J is
Yes,
only
that is
taxable.
what is taxable. Correct.
Okay, taxable. Sir, my other question is, sir, subsidy received from entity other than central government and state government would be treated
That
as
is
subsidy.
consideration. That is consideration that will be taxable.
Okay.
Yes.
And the last one is, sir, like in the security part, you were explaining about the derivative part. So
Yes.
in that case, sir, whether, sir, speculative transactions are out of GST.
See, speculative transaction, this term is not used in GST, it is used in income tax, correct? In
Right, sir.
GST, please understand, beta, what is speculative? So all these derivatives and all are are in income tax commonly referred to as speculative. But in GST, we have not taken the common term. We are going to individual transactions. Like on your screen, you can see forward contracts, derivative contracts, future contracts. In GST, we have separate names because these are actually separate transactions, and income tax has given a common name to all these transactions.
Okay,
So
sir.
there is,
So in that case, sir, intraday transaction, sir, whether it will be exempt or taxable.
again, beta, intraday will be what? Future, forward, something of this will be happening. Now, again, intraday is a concept which we have used.
Hmm.
Please understand, there is no such term used in GST. See, intraday covers a group of transactions. So you
Right?
purchase and sell within the same day, that is intraday, correct?
Hmm.
But what
Right.
you are purchasing, selling. So GST is more interested in what you are purchasing, selling. Is it a
Okay.
forward contract? It is a future contract. Is it a derivative contract?
Okay.
Are you getting this? So you are going by the income tax terminology. You are giving me the group of transactions name. But
Okay.
GST says, don't give me group name, give me individual transaction name. So within intraday, what you have done? Whether you have purchased and sold gold in the same day, if you have physically
Right.
purchased and sold gold in the same day, it is leviable to GST. But if you have done
Okay.
gold derivatives in the same day, it is not leviable to GST. So that is what is the difference. Intraday will cover so many set of transactions.
Okay. Okay, sir.
ठीक
Got
है?
your point, sir. Thank you, sir. I have only these questions.
Super. This is your first attempt.
Yes, sir.
Excellent. Great. Yes, Rohan.
Good morning, sir.
Good morning, Rohan. Please tell me.
Sir, actually, I have one doubt with regarding to the printing of envelopes and
Yes. Tell me.
paper letters. I was unclear about that.
See, where you go to a printer to get what printed? Envelopes, boxes. So understand this, your intention is not in the printing, your intention is in the goods. Because why you are buying envelopes? Because you want to send letters to someone. Why you are getting the boxes done? Because you want to send your goods packed in that box, right?
Yes.
Now on the box, on the envelope, obviously this will be printed. What will be printed? The name of your company, the logo of your company. But that does not makes it that does not makes it that your intention was printing. Your intention was buying the goods. So it will be supply of goods, correct? But where you
Oh,
want to get a book printed. Now, in that case, your intention is in the content, that is the printing. Anyways, if I have to send books to people, it has to be printed on some paper. Your intention is not to buy the paper. Your intention is to get the book printed. So there it will be the supply will be supply of printing,
sir.
that is
Yes.
service.
Okay. Okay, sir. Thank you.
Perfect, beta. Okay, thank you. Yes, students. Anybody else has any questions? No? Yes, Radha.
Sir, just a question like, can I score 100 in IDT?
But a scoring 100 in any subject is possible.
Okay.
There
Uh,
is no such thing that you cannot score. In fact, there are students in past whom I remember have scored that.
okay.
Obviously, there would be rare. In 2 or 3 attempts, there would be one person, but you get such scores.
Yeah,
Because
so
in IDT, it is not a theory paper that, like how we have an understanding that every time something will be compulsorily deducted, there is no such thing. If you are writing the answer perfectly, covering all the relevant part of the answer, we give you full marks.
Yes, that's what I was asking, that how to present the answers in that way so that we can get the good marks actually. Because so you like actually whenever you are teaching right now, I observed that you underline the points, you say most important. So are they the keywords which has to be, connoted in the exam? That is the thing.
See, whenever I'm marking something as key, that has two relevance. One, definitely exams, and two, this is the key part for either understanding the question or either understanding the provision. Because for understanding the provision, you need to focus on these words so that the provision will be clear in the first case. And then definitely, if your question is relevant to this particular point, you should definitely include it in your answer also. But
Okay.
that does not mean that if I have underlined so many things in this particular point, then everything has to be written in the answer. Because
Yes.
answer has to be written related to what is relevant to that particular question.
So relevancy is a matter of professional judgment of a student itself in that case.
You can say so, but I will say that you will get this judgment very easily when you refer to our past exam MTP RTPs. So
Sure.
if you simply go to the institute's web portal and where you find all these MTPs, RTPs, if you simply go through them, you will get a very good idea as to what is relevant for writing in the exams.
Yes, sir. I got your point. I will refer it and next time I will ask you by referring it.
Definitely. Sure,
Okay.
beta. You can
Yes.
always ask us the questions,
Sure,
right?
sir. Done, sir. Have a good day, sir.
Good day, everyone. Thank you very much. Good day, all. Yes, Sankheji, we can conclude. Thank you, Sankheji. Good day.